Yeah.
Thank you, Stella. And I want to add my greetings and say thank you all for attending this afternoon. My name is Stephen Mayer. With me is Luntadilla Paulo, and we're both volunteers with SCORE Chicago. We're here to present a webinar today to help you in your small business. Luntadilla is an expert in tax matters. He will tell you a little bit more about himself. But as volunteers for SCORE, we're part of a nationwide network of volunteers. SCORE is an organization that's been around since 1964, and it's a resource partner to the United States Small Business Administration. Briefly, what we do at SCORE, our mission is to help small businesses get off the ground and grow. The way we do that is really twofold. One is free and confidential one-on-one mentoring. So people, volunteers in our chapter here in Chicago, like Luntadilla, like myself, do mentor clients like you, small business owners or aspiring entrepreneurs personally. Today, however, the second track is not mentoring, but education. And we offer, over the course of the year, many webinars and many events in this kind of format that are designed to help you learn an aspect of being a successful small business owner. Our mission, as we said, is to help small businesses get off the ground and grow. Our vision, if you will, is that no one should be on this entrepreneurial journey alone, that everyone should have the resources they need to thrive as a small business owner. And so it's in that spirit that Luntadilla is joining us today to present really the ins and outs of tax strategies and compliance for your LLC. Luntadilla, as you can see, is himself a CPA and an MBA. He's very qualified to do this. He's a volunteer with our Chicago chapter of SCORE. Um, and it's very timely, too, that we'd be addressing this. Soon after the first of the year, you may be engaged in closing your books, so to speak, on 2025, planning the taxes that you may be filing on April 15th. And there's a lot of information here that applies directly to you. So I want to invite you to, if you're interested in learning more about SCORE or getting a SCORE mentor, to go to our website, score.org/Chicago. You can sign up for a mentor there. As I say, it's completely free, it's confidential, and in the spirit of no one being on this path alone, it's somebody to really help you become
Yeah.
an entrepreneur or a more successful one. But let's get started now. I want to turn it over to Luntadila. As a matter of housekeeping, you will get copies of this presentation. You will get access to the recording. BACP will take care of that. And we'll be happy to take your questions. Um, I think Luntadilla will take your questions as they arise. We don't have to wait till the end. I'll try to monitor that and help Luntadilla um, keep an eye on that as well. Is that okay, Luntadilla?
Yeah, yeah, absolutely.
Good.
Thank you. And I
Okay.
appreciate that.
Without further ado, then I'll kind of leave the screen and let you get to it. Thanks, everyone.
Sounds good. Thank you. Yeah, welcome everybody. This is Lunta Di La Paulo. If you haven't realized it, I am really excited to be here to speak with you, to share with you what we do for our clients, the new changes in the tax law, how you can position yourself as a business owner from the context or perspective of an LLC. And before that I go any farther, I just wanted to take a second here to appreciate this moment. And Stephen, thank you so much for inviting me. again, and to our BACP program department in Chicago. I appreciate the invitation. I am grateful. I don't take it lightly. There are many, many, many hundreds of tax professionals across the city of Chicago, across the US, and it's an honor. It's a privilege. And I promise you, if you made it to this webinar, I am not going to waste your time. You probably also gathered from my accent that this guy probably wasn't born in the US. And yes, I became a US citizen a little over a year. I am really excited and proud to be joining the American family. I've been in the US for a little over 12 years now. I came in for school. I love this country, and I'm excited to continue contributing. To this great nation, to what we do. And in particular, my work is directly tied up to helping small business owners, startup founders, whether it's through SCORE or through my own business, Yeto Accounting and Tax, right? That's really what we do. We help business owners, figure out the best way to resolve their tax problems, their books problem, or their exit problem. So with no further ado, I just want to tell you why this presentation is important for you and I, and especially for you at this moment. Okay, I want to give you three reasons why you should really stay on this call for a little longer, right? If you're planning, to give it maybe 10 minutes and then jump off, I'll invite you to stay longer. And here's the three reasons why you should really stay here. Number one, right, throughout this presentation, I'm gonna give you every single detail you need to be ready for the tax season, not only based on what worked for your 2024 tax returns, but what you need to do and know for your 2025 tax returns, because a lot have changed. If you're still using the playbook for 2024 tax return preparation, you're probably gonna be at the mercy of whoever is gonna be preparing your tax returns. Number two, especially if you own a limited liability company, LLC, whether it's a single member LLC or a multi-member LLC, so that I know, by the way, that I'm speaking with the right people. If you could just add into the chat, if you own a limited liability company, just put there a one. Or if you plan to start one this year, put a one. If you don't have one, just put a zero, okay? So I'm seeing a lot of one here, a lot of ones here. Thank you so much for participating, right? I love the energy that I get from the chat. I keep the chat open, right? I see a three there. I hope that is three LLCs, right? Okay. This energy, this engagement makes me really excited, right? Not that if you don't give it to me, I won't, I love to interact with my audience. And I like to take this approach as if I were speaking only to you, okay? So number two, what we're gonna be sharing with you here is to help you avoid unnecessary risks. Because we have seen time and time again, right? Business owners who, you probably should know this kind of information, and unfortunately it's not really your job to go hunt the details, research, and you know people you trust who should have known, sometimes they don't do it correctly and you get exposed. So we're going to talk a little bit about these red flags as well. And the last portion of this presentation, um, it's really going to be focused on the major tax provisions that came with the OBBBA, right? Some people call it the OBBBA, right? Whatever names we're calling it, a little bit irrelevant. But I just wanted to give you a little bit about why this matters, right? So that okay, what are we gonna be covering here? And before I move further into our presentation, right? We're going to be looking into LLCs, whether it's single member or multi-member. But I want you to remember this is an educational content, okay? My lawyers told me you really have to say this at the beginning, right? Because uh, every year the professional liabilities insurance gets expensive. And part of that is we're not allowed, right? We're not allowed to advise people. We're not engaged as clients. So what we're going to be sharing with you here is really for educational purposes, right? And the application of this information really depends on the facts of each person, right? So unless we actually understand the facts based on what you have, your industry rules and proper documentation, right? A lot of these, you shouldn't take it as an advice to you specifically, but it's really good information. As I said, I promise this is gonna be worthwhile your time. Okay. And now that we have covered this, I have broken down this presentation into four parts. The first part, we're going to be talking about the foundations. Okay, LLC, what is actually good enough, right, that you need to have for your LLC. Okay. Number two, what applies for single member LLCs. Number three, we're going to talk about what applies for multi-member LLC. And then the last part, we're going to address the OBBBA and a little bit of tax prep readiness for all of us. Okay. So, who's excited for this? Just put a one there so that we know you are following, you are going to have a lot of fun. If you don't have it, listen, I have a pen and a paper that I have here, right in front of me. I'm gonna be taking notes of some of your questions, right? And I would appreciate if you can do the same, right? Get a pen and the paper. I'm old school. I like to write, right? Using my hands, typing sometime, I need to connect with my writing. So do that. Get a pen and a pencil or a paper, right? So that you can take notes. If you have it ready, let's the fun begin. Okay, number one, for us living in Illinois, you can form your LLC with the state of Illinois. If you live in other states, you can organize your LLC in the um, state or jurisdiction you live in. Okay, you file your articles of organization, number one, right? And to do that, you need to have a registered agent and a business address, right, for your limited liability company. Okay, I'm giving you what's good, what's decent. You need to apply for an EIN with the IRS, okay? So that with this information, you can open a business bank account, okay? So let's start there. Now, here's your first question. Can you access easily your articles of organization? Do you have a place that you have organized your articles of organization, your registered agent address, your EIN, and your bank account? I'm seeing a lot of yes, so really proud of you, really proud of you. Thank you for that, right? And if you have more than one owner, do you have an operating agreement, right? Do you have an agreement with the other owners that was written by a lawyer, an attorney who can look into provisions such as what happens if one of you is no longer interested in continuing with the limited liability company? What happens, God forbid, if you're no longer available or capable of continuing to be involved with the LLC? What happens if one of you wants to sell their share of the LLC? What happens if one of you passes away, right? Those are some of the conversations that needs to be had. How the business can be valued, okay? One thing that needs to be talked about. Okay, so that's the formation checklist. Let's start there. You have to get it and have it organized, number one. Number two, when you think about your LLC, did you form it? We hear this a lot. I started my LLC with my husband. I started my LLC with my partner. But when we look at the paperwork, there is only one person's name, and it's 100% to them. Okay? So often we see a lot of problems there because people have one idea in their minds, But in practice, when it comes to paperwork, it's a separate or different reality. So you need to pay attention there. Let me show you a chart here. Most of us start here. I just want to paint this picture for you so that it's very clear. Most of us starts here. And if you are a single member LLC, you file a default Schedule C. We're going to talk a little bit more about this in a second. I'm seeing somebody in the chat who said, can you talk about registered agent? I'm going to answer that in a second. Most of us start here, right, as a single member LLC, and some other people would start here when there is at least two partners, okay? In limited liability companies, partners are called members, right? Different members, okay? When you have different members in your limited liability company, you are required to file the Form 1065. And this Form 1065 produces a Schedule K1 that is distributed to the members of the LLC, okay? There is a little bit more requirements here, such as maintaining your capital accounts, tracking it, maintaining basis, and so forth. We're gonna talk a little bit more about these. And the LLC, whether it's a single member LLC or a multi-member LLC, you have an option of making an election. Most often it's a C Corp election where you are now required to file a Form 1120S. And very seldom, right? Very seldom, some people choose to be taxed as a C corporation. Very seldom, okay? So let's go back here to our friend Muhammad, who asked about registered agent, right? Registered agent is the authorized name of the person, the address or their contact detail that you have to provide to the state so that they know who they can serve, right? It's a legal terminology here. I'm not a lawyer, but they can serve any paperwork that has to do with the LLC, right? Whether somebody sues you or somebody needs to provide important information to the LLC, there has to be an address that information needs to be delivered, okay? And there are many services online available. Some of them, they have, locations that you can subscribe to their services so that they can be your registered agent, right? I believe we can provide you some options, right? In underscore, there are a number of them, or if you just Google registered agent services, there are a ton of service providers out there. Okay. But just for our information, we're gonna take all of the questions at the end. So just, that's why I asked you to have your pen and paper. Write down your question towards the end of this conversation. Let's bring all of these questions, okay? Great. Now, let's talk about what governance and documentation looks like, right? We call it an audit file, right? Not because you're going under an audit, but what you actually need to have ready. If you are a multi-member LLC, your operating agreement needs to at least tell us about the profit and loss allocation rules. How are profit and losses being allocated? How are the capital contribution or distribution are to be handled or made? How is the basis in the interest, right, in your LLC is being tracked? Who is going to be managing the LLC? Are they the owner of the LLC, or are we hiring an outside party who's going to be serving as a manager in this LLC? And earlier, I talked about distribution rules, buy sell terms, right? Very important for anyone with more than operating a multi-member LLC, and how you resolve disputes, okay? And a lot of this conversation, we often have it with a lawyer supporting a client so that we can provide that tax perspective and the implications on it while the lawyer handles the legal processes and best practices within the law. Okay. It's very important that you keep meetings minutes, any resolutions for major decisions, contracts, invoice, have a system that it's easy for you to use. Today, you can use things like Google Workspace, Dropbox, and many other tools out there that you can create folders and subfolders, right, to organize invoices. Listen, we just started 2026, right? So it's really easy to do this right now. Create a folder for January to December, right? For invoices, major contract, major documents, put them under permanent files, right? Things that do not change, loans, purchases, subscription documents, and so forth, right? It's very important to keep separate. And you've heard about this before, separation between personal versus business affairs, right? I always tell all of my clients, you gotta run your business as if you were a publicly traded company. You have to run things clean and separate, right? Um, it's very important to look at that. Now, let's shift gear a little bit around accounting setup. What you need to have going so that you look organized and decent with your LLC. Number one, if you just started or you need to review and revisit your business, let's begin with your setup. Okay. Number one, do you have an accounting software? There's a lot of free versions out there. So there is zero reason for you not to have at least a system that tracks your income and expenses for your business or LLC. Okay. So if you're starting today, make sure there is a possibility to scale. And depending on the industry that you run your business in, there might be some industry specific accounting requirements that you need to build your accounting infrastructure based on. Number two, most people actually make a huge mistake here in the chart of accounts, right? Chart of accounts in accounting, we understand it as the skeleton, okay, supporting the rest of your body. What happens here is most people set up their chart of accounts once and then forget about it. This is something that needs to be updated, monitored, and cleaned continuously. It's not a one-time thing and then you forget it. No, it's something that you have to maintain. You have to keep it up constantly. Okay. Under software, accounting software, let me take a step back here. Excel is okay, but it's not the best way to keep your accounting system going. You need to be able to close and reconcile your books at least on a monthly basis. Okay, on a monthly basis. You need to have a time to sit down and look into your accounting. If you're not doing this is what happens. Towards the end of the year or at the beginning of a new year, before the tax season really gets crazy, we begin seeing people coming and saying, oh man, I didn't do my books. I didn't clean up anything for the past, 10 plus months. And they expect us as accountant to give them a huge discount because they need to get their taxes done. My friend, the same amount of work that I would have been doing every single month, now I have to do it in one sitting. Okay. That now I have to forget everything else and only focus sharply on one thing, that is cleaning months of transactions that should have been done throughout the year, right? A little bit more closely. Guess what happens? We tell them, my friend, I'm sorry, but you're still gonna pay a monthly fee as if you were going to pay if you had engaged with us, right? One of my friends in our CPA community actually suggested something really interesting. Let's discourage bad behavior. People leaving their books unclean for months. Okay, let's start charging an additional fee to discourage people from doing that. Right? If you didn't take care of your books throughout the year, yes, I'm gonna charge you a monthly fee anyways, and a penalty for not taking care of your business sooner, right? So, my friends, in your accounting, you have to close your books at least monthly. The most you can wait is quarterly. Every 3 months, you sit, you clean up everything, you do it right, or you find somebody to do it. If you have employees, there is a big problem today in our society where we have people who should have been managed in the company as W-2 employees, but they are run as 1099. And we get clients who come to us exactly with this kind of problem because the IRS, the Social Security Administration, is after them because they miscategorized, they classified incorrectly an employee as an independent contractor. Now they have to deal with unpaid taxes, right, Social Security and Medicare taxes. They have to deal with fines and interest on these balances, right? And that just keeps growing, right? So do yourself a favor, right? Save your business. Have written contract that are clear. And if you're not sure if this person should have been an employee or an independent contractor, you really have to get organized in the way that protects you, your business, and your family. I am a strong believer in our society, in our model of economy. I love the fact that you and I can own and operate a business and nobody comes to shut it down at their will. This is a luxury that we take for granted. And to protect it, we have to follow the rules that the government, the IRS, tells us how you have to at least keep certain things organized. Okay? We have international clients today, and some of our international clients operate in environments that their government crushes small businesses every single day. They pass rules that you're not gonna believe that it exists. Let me give you an example. I'm not gonna name a country, but their government requires that your invoice is processed through their government system so that they know how much money you made, right? I'm not talking about 1099s. I'm not talking about W-2s. I'm talking about every single invoice you process for your clients goes to the government system. Just think about that, okay? Yeah, I know. It's unbelievable. It's really unbelievable, right? So make sure you're compliant with your payroll, and especially for those of us who run our own business, right? Paying quarterly taxes estimate at the federal and the state level, it's really important. We see clients coming in and they want us to do miracle or magic. They tell us, hey, I hope I'm not gonna owe. And when you ask them, hey, did you pay any quarterly taxes? Right? And by the way, the Q4 quarterly estimate payment was due on January the 15th, right? If you are here in this call and you didn't pay your quarterly taxes, please, 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 I beg you, going to the IRS, going to the state's website and make these payments if you can. Okay? Please do that for all of us. Okay? You need to calculate your quarterly taxes estimate and get them paid. I want to talk now a little bit about the banking infrastructure. Most small business owners only have one bank account that they use for receiving income and expenses. And sometimes they use it to pay for their own personal expenses. That's chaos. That's not organization, my friends. That's not how you should be running your business. Let me give you what works for our clients, This is something we teach every single client from day one when they come working with us. Number one, if you can't afford having more than one bank account, at least have one bank account and one credit card. And here's why. The bank account receives the income from your clients, and the credit card is used only to pay for expenses. And from your bank account, you only have one transaction to pay down the credit card you used. For some of our clients who have the ability to have more than one bank account, and they have employees, we like to have one bank account dedicated only to run payroll, one bank account that only receives income, and that income does a transfer to the bank account that processes payroll and to another bank account that processes expenses, okay? And another bank account that it's used as a reserve or taxes payment. If you're following me so far, please just put a yes there. Yeah? If so far, what we're sharing here is very valuable to you, please just, help us put a yes there. Thank you. Thank you. I appreciate all of you putting yes there. Right? If you have a question, just write it down. You're gonna have the chance to give us all of your questions soon. And I'm gonna wrap up this slide here to talk about internal control, especially for small business owners. If you have somebody in your company that handles cash processing, if you have somebody else who handles your financial reporting, you have to separate these two systems. If they're handling accounting, reconciliation, you have to separate them from handling cash. Because we have seen time and time again cases of fraud. When you give the same person the ability to write checks, to receive cash, and also put it into the system, the accounting system, that's where fraud happens. So don't do that. There have to be segregation of duties, segregation, separations of responsibility, especially around financial reporting and cash management. Very important. Now, you have to have, certain policies in place. If you're not keeping track of your mileages, your vehicle expenses, hey, please download an app. There are plenty out there of apps that you can use to track your mileage. This is one of the areas of risks for audit. We're gonna talk about it soon. Now, I wanna run quickly here. If you run a single member LLC, as we said, your default is a Schedule C. The problem often here is the fact that you have a lot of self-employment taxes to pay. You need to make sure if you're planning to run your LLC for a long time, when you started an LLC, it might have been the right structure for you to be on. But as your business grows and scales, you need to make sure that you can sit with your tax advisor and ask the following question, and please write it down. Is my business structure still the right one given where we are today and where we plan to go? Because an LLC is not the type of structure that is designed to save you money. It's designed to protect your asset. It's designed to give you protection of liability. That's what the whole name is. Limited liability company. It limits the liability if you are following the rules. If you're not following the rules, a good lawyer, even a bad one, can pierce the veil, meaning can make a case for why this LLC is not really an LLC. You and the business are essentially the same person. Okay? Very important. So I hope you took down the question that I mentioned. Is my business structure, is my LLC still giving us the desired outcome for how far we have grown and where we plan to go? Is it still designed to give us the value we want from this business, from this entity, excuse me? Okay. And when necessary, for a lot of our clients, we run the S corporation analysis to show them what are the costs, what are the dangers, what are the limitations, what are the complications, why this actually might be a good idea for them to move into an LLC. We do S corp election every year, at least some 20 times, right? But before we make that election, we run the analysis. The number must tell us, are we gonna get more benefit than costs of creating these, of making this election? Now, I want to caution you, when you make the LLC, the S corp election, excuse me, you need to make sure that you have the ability to actually pay a reasonable salary to yourself as the owner. You have to be mindful to the fact that there are going to be some additional costs, things like payroll costs, things like bookkeeping costs. You're going to have additional filing, right? If you are a single member LLC, you only had to add a Schedule C in your tax return, Form 1040. Now you would have a Form 1120S that you have to file. And there is a greater danger if you're mixing personal and business expenses. I want to caution you the same way that we caution all of our clients. We tell them, hey, here's what you need to know. We give them the information and they make the decision. When they are ready, we move forward. When they're not ready, we strongly discourage them of taking that step, of making that next step. Okay. Now, if there is a fit, if you have consistent income, right? We like to see at least $70,000. In the past, we were comfortable with $50,000 in profit. But today we need to see consistent profit, at least 70 grand, right? In net profit, right? Revenue less expenses, at least you're making 70 grand there, right? For these to make sense. Okay? Just wanted to add this there. Now, let's turn our wheels into single member LLCs. We're going to look into some of the dangers, some of the things that shouldn't be in most Schedule Cs that we still find. Okay. And my friends, people, there's a lot of tax professionals out there. I'm a friend to many tax professionals. I appreciate the work we do for a lot of people, whether are my clients or not, other tax professionals. We talk a lot. And there is a growing concern among us as tax professional about people who took a tax class and then goes out there to start their own tax preparation business without having the basic foundation of what actually makes you compliant or not. And some people are literally just creating fraudulent tax returns. Last year, we had 3 cases of fraudulent tax returns. A client came to us and by the way, most people don't even know that their tax return that they sign. And by the way, when you sign a tax return, it's under perjury. Okay. They signed the tax return without knowing that the tax preparer actually committed fraud. And there is probably thousands of these cases across the US. And people only know there is a problem when the IRS comes knocking on the door or the State Department of Revenue comes knocking on the door. Let me tell you this story. We got this client. He's a university professor, and their tax preparers thought after filing the tax return, and there was a question. They received the tax notice, and they started calling the tax guy. And this person is not answering the calls, not answering emails, just started ghosting them. Okay. and they asked for referrals, and they ended up coming to us. And we do this with every client. If a new client comes and don't want me to review their last year tax returns, I don't work with them because I don't know what I'm getting myself into. That's that's my rule, and I don't change it for anybody. Becoming a CPA is not a cheap business. It requires many years of studies. It's a valuable license. I'm not going to jail for anybody. Okay. And this client, we started reviewing their tax returns. The first thing that was a major red flag, the banking information on the tax return where the direct deposit for the refund was sent, it wasn't their banking information. When we pressed, they didn't even know whose banking information was it. And guess what? It was the tax preparer's tax return. I asked them, did you have a business in 2024? They said, in 2024. No, I didn't have a business, but they had a Schedule C on their tax return, which created a massive loss that reduced significantly their tax liability, and the refund was sent to the tax preparer, and the tax preparer sent whatever he felt, was comfortable to send to the taxpayer, which was basically half of that refund he kept and half he sent to the taxpayer. People are going to jail because of these kind of plain sight jokes. So let me tell you here what you should be paying attention to, okay? You have a Schedule C if you are a single member LLC. Your Schedule C goes into your Form 1040. There is no separate tax return to be filed. If you have an LLC, your Schedule C goes to your Form 1040. You have to pay your quarterly taxes estimates. If you made money, don't, don't, don't wait for the government coming knocking on your doors before you begin worrying about paying your taxes. You have to keep good documentation. You got to keep good documentation. I always tell people this when I'm interviewing them for tax preparation. You're telling me you made $90,000 and you spent, $10,000 in professional fees. If you're sitting across an IRS agent right now and asked you to produce the invoices or contracts or receipt that justifies the $10,000 you want to claim for professional fees, would you be able to produce this document? Often, do you know what the answer is? Let's try to reduce that a little bit. No, my friend, that shouldn't be the answer. That should not be the answer. The answer is yes or no. And this tax season, right? That's why having your bookkeeping done throughout the year with proper documentation throughout the year, it's important because you sleep well. You don't have to worry about if the IRS or the Department of Revenue, comes asking about these expenses. I'm not gonna have to worry about anything. Okay? Now, let's quickly jump into what's not deductible if you are a single member LLC. And we see it all the time. People deducting their honored roll. When you have an LLC, you don't pay yourself a salary. You do a distribution. And here's the mistake we see time and time again. People doing random distributions. If you own the shares of Apple or Meta or Alphabet, you don't call Apple or Facebook and tell them, hey, send me a check of $5,000, and they write the check and send it to you. They don't do that. There is a clear date they announce we're gonna do a distribution of dividend in date X. So here's what's a good way of doing it. You have to have a schedule. If you're planning to do monthly distribution, I understand, my friend. Sometimes running a business, you don't know whether this month you're gonna have a lot of money in the cash in the bank account or not. But you have, even just, $500 per month. At least it gives you predictability. You have a schedule. You can do a special distribution every quarter. Every quarter, I'm gonna draw $10,000, right? You have something documented, written that gives you a roadmap. We see other business owners claiming personal deduction, right? They go out, they eat, even though meals are deductible 50%, some people even deduct groceries, right? They go to Aldi, Target, they buy stuff, and they're writing everything off. These people are not serious, right? Because when the IRS or the Department of Revenue of your state, assuming you're outside of Illinois, comes auditing your tax returns, you're gonna wish you never did that to begin with. And folks, I'm not saying these things to scare you. It's I want you to have this information and begin fixing the mistakes if you're making any. Okay? Another big mistake we see people making is deducting federal income taxes. That's not a deduction for you. Unless you run an accrual basis of accounting, we don't have a lot of time to talk about it here right now. If you are a cash basis business owner, bad debt expense is not deductible to you. Okay? So, what really happens here? If you run a single member LLC, you pay a lot of self-employment taxes, as we said. You have 12% Social Security taxes plus an additional percentage here in Medicare. Okay. There is some, okay, this should have been 13, 12.7%. I rounded these. There is a mathematical error here. So forgive me for that. And then there is an additional 0.9% Medicare taxes if you are above 200K as a single or head of household, or 250 if married filing jointly. And for 2026, for planning purposes, your base for Social Security, these start kicking in at 184K. Okay. Now, let's see one example here for us. Let's call our case study here. Adam is a barber in Hyde Park, and in 2025, he made 78K in his shop, which he runs as a single member LLC, and he has no dependent, and he is single. So what happens here with our friend, I actually want to open the Excel workbook here for you to see it. Can you see my workbook? Please just put a 1 there for yes. Can you see the workbook? Okay, perfect. So he's single. Let's put here 2025. And he made 76K. Thank you for your answers. 78K in net profit, which is flowing straight to Schedule C. Okay. Now, what's happening here in terms of self-employment taxes, right? We multiply by 92.35%, right? There is a deduction there that takes place. We live in Illinois, there is a 4.95% tax rate. So what we're really looking at here is Social Security taxes, 8,900, Medicare taxes, 2,000 with some changes. The total for that is $11,000. Plus, we have our taxes for the state of Illinois, right? The summary here is really what we have, right? We have the net profit, we have the additional taxes that comes down to 11,000. We have the deduction for half of self-employment taxes here. We have Illinois taxes, The total taxes that he's paying is over 14,000, and net cash to the taxpayer is 58,000. Okay? So going back here, right, the total tax burden accounts for 50 or 25% of his cash goes to taxes in general. And it takes home about 74%, which is one-fourth, right? One-fourth of the money he made in a given year went to taxes. So it's important to keep an eye on that. It's very important to keep an eye on that, okay? This slide on self-employment taxes is incorrect. Yes, we acknowledge that. There is a small mistake there. The total taxes, right? The total taxes here should really be 15.3%, okay? Some of the red flags that we see often with Schedule C, especially when we are reviewing new clients' tax returns. Number one, we see a lot of miscellaneous or other expenses that are not explained. There is no statement that explains it. The best way to claim miscellaneous expense is to actually list your expenses. Was it supply? Was it software? Was it tools? You put it there, you list it there, and you put the appropriate amount for these expenses. If your 2024 tax return has a big miscellaneous expense or other expense there that was not justified, it is a red flag. You need to be aware of it. And this year, when you go filing your tax return, you gotta make sure to tell your tax preparer to make sure to list all the expenses, because there is actually a place on your tax form that needs to report these lines. We shouldn't be lazy to get information correct. When expenses don't match your industry expenses. So let me give you an example that we often see. Somebody who is a barber shop, for example, or an Uber driver, right? And is claiming travel expense over $20,000. My friend, you gotta have a good explanation. You gotta have a good justification for that. Or somebody in asset light business, right? A CPA like me claiming an expenses, or an educational consultant claiming a big expense in CapEx, right? Heavy machinery purchase, but you are an education consultant. How in the world are you spending $50,000, right, in a machinery, and you want to write it off? You gotta follow industry standards here. Deductions that don't reconcile with supports. That's a big problem. We see these with travel expense, with meals. We see these with vehicle, auto expenses, right? Claiming a deduction that you don't have any support for it. Just essentially just making up numbers, right? Borderline, you're moving very close to fraud, which often leads to jail time, right? As a CPA, I'm not doing it. I'm not taking clients who want to commit fraud. Very expensive way to earn a living. This is another mistake we often see. CapEx, right? Being deducted as repair and or maintenance. Certain expenses need to be put in the books as asset and not as an expenses. Okay? An expense is an expense. There are proper rules for them, and the capital expenditure is supposed to go to the balance sheet. Another red flag here, huge expenses, okay? Huge expenses that are not matching your income or are inconsistent. This often can trigger hobby loss, right? You have a hobby, something you enjoy, but you want to claim deductions for it. Watch out, my friends, okay? And the way to get out of this, right? Make sure you're documenting your business intent that is for profit and keeping the right documentation that can prove that this is not a hobby, this is a business, an actual business. Even though it's losing money, it's not generating enough money yet, right? It's a business with the intent of making profit. Okay. Some big item here, home office expense is one of them. Retirement, auto, and travel, another. Meals should have been included here, and depreciation, right? Those are some of these elements that we need to talk about them with our tax professionals. Now, I want to give you some areas that you need to have some conversation with your tax professional to help you save a little bit of money. When it comes to benefits and healthcare, okay, there are tons of strategies here to help you reduce the amount of your taxes, right? There are legal ways to organize your healthcare, your retirement plans, your benefits, and structure them in an accurate manner so that you can reduce your taxes legally. Hiring family, spouse, kids, relatives, there are really good ways to transfer wealth in the family while reducing your tax exposure and liability. Home and travel, right? Having an office, right? It's one of the best ways to reduce your uh, tax liabilities. Now, today we have another big problem. There are people developing ways to get money out of your pocket by promising you things that not only are in the gray area, but they are too aggressive from tax perspective. And if they were examined by tax professionals, the IRS would have said, no, you're not getting this deduction, no tax benefit. Okay? So we gotta watch out for this. We gotta pay attention. You gotta get a second opinion. Okay. You need to make sure that if somebody, I actually appreciate the fact that recently we've been getting calls from people, or when we reach out to somebody, a referral, and they ask us, okay, what are your credentials? We're CPA, okay, where are you registered? In the state of Illinois, here's the state licensing website. Search for us, you'll find us there. We don't have any problem. We're very well, we're in good shape. And if you need referral from our existing client, we're gonna give you, a name after getting their permission so that you can call to double check our work. Okay. I appreciate the fact that people are getting a little bit more skeptical. They are exercising a lot more their judgment before having somebody involved with their taxes. So, if you're one of these folks, I appreciate you doing that. Please continue doing that. Okay. Please continue doing that. Okay. It's very important. Now I want to run quickly to part three because I want to give us a little bit of time for Q&A. I know this presentation is the entire webinar. It's 1 hour and 30 minutes, and we're getting towards 1 hour already. So let's talk about multi-member LLC. A lot of what we covered in single member LLC also applies to multi-member LLC. I am going to stress only the key parts here, and then we're gonna go talk. We're gonna move into OBBBA. Wow, that's a that's a long thing to pronounce. For multi-member LLCs, you report your income and expenses, assets and liabilities on your form 1065. And I also want to show us if this is gonna allow me to do that, right? Just in actual form 1065. Okay, I hope, okay, this is not letting me actually click into the link that I have there, but we're gonna send you guys all of the information, all of the information so that you can actually access this presentation, okay? Now, most partnership most multi-member LLC gets really messy here. People are not tracking their capital accounts. People are not tracking their basis in the business. And here's why it matters. If you are going to sell your business or transfer the business to your loved one day, or in case of a multi-member, right, LLC, if one partner or one member needs to leave the business, right, there has to be a basis that allows us to calculate the gain or loss. Any asset you sell, it has a value, the cost, your proceeds, for example, your house, right? When you sell a house, you have the price of the selling price less the cost of the house and improvement that gives you your losses or gain on that sale. And for the business, it's exactly the same thing. If you started your business 10 years ago and you never your accountant never tracked this, right, you are in a big problem. This needs to be reconstructed since you started your business, and it's not fun. It's a pain to deal with, right? Especially if your operating agreement has special allocation for different members of the LLC. We have seen, operating agreement that says even though you contributed 90% of the money, you only get 10% of profit, but 90% of losses. Man, how do you deal with that? How do you deal with that? Right? You as a business owner are responsible to the tax returns you sign. It's not your tax preparer. So you kind of need to know a little bit of this kind of information so that you know how to review a tax return when they send you before being filed with the IRS or the Department of Revenue. Okay? Make sure you understand a little bit of this. And if you have your businesses across different states, you have multiple states to report income and losses. Okay. So very important that we are keeping track of this kind of information. Now, we also have seen some multi-member LLCs deducting things like federal income taxes, again, personal expenses, bad debt expense, even when there are cash basis, right? Um, salary to owners, right? The withdrawal, these are not deductible. Guaranteed payment can be deductible. But there is a way to structure that. And when it comes to the K1 that is reported to you, make sure when you're reviewing that, okay, when you're reviewing that, you're actually reviewing that accurately for what's the income and profit being allocated to you based on the percentage you own. If there is any gains or any gains and losses, any interest or dividend or charitable contributions and so forth. Make sure to keep all of these organized. And with that, I want to move into the new tax regulation, the new tax provisions, and then we're gonna wrap up with tax prep readiness to give us a little bit of time. I'm gonna run through these so that you have starting conversation to have with your tax professional and ask really good questions so that they can help you get the most of this tax season. Okay. So, number one, some of the things that we need to be happy about. QBI, qualified business income deduction. Now it's permanent. And by the way, when we say permanent, it doesn't mean forever and it's not gonna change. When tax professional says permanent is until the Congress says otherwise, approves otherwise, okay? So as far as we know, right now, QBI is there for us, 20% deduction on income for qualified type of businesses. We also saw an increase in state and local taxes from 10,000 to 40,000. That's exciting for a lot of us in states like Illinois, New York, California. Uh, some good news there. And there are new tax provisions that we're going to talk about. A lot of you probably already heard about them, no tax on tips and overtime up to certain amounts. 100% bonus depreciation came back. It was going to expire at the end of last year, but the Congress did us a huge favor. So a lot of our clients who have CapEx, they're gonna be happy. And for you folks who are planning to make some major expenses, this is something great. The R&D, a lot of small business owners actually could have qualified for this, but they don't take advantage of this credit. It's also back. Auto, vehicle, clean energy credits. We're gonna be seeing those going away very soon. But here's a quick summary. We're gonna run through this so that you can begin asking your questions. So, as we said, QBI, that's a 20% was gonna be over by December 31st, 2025. As we said, SALT, state and local taxes, was capped at $10,000. Now it got bumped to $40,000 there. And there is a sunset, or it's going to revert by the end of 2029. Outside of that, we also have R&D, right, that was extended a little bit more for a lot of our clients, I mean, for everybody in the US, right? There's a lot of opportunities here for even small business owners to get these credits to help them reduce the amount of taxes they pay. Interest expenses, there was a cap here. This is an area for folks who are raising a lot of capital for acquisition, business purchases, real estate, right? Developers. This is gonna make a significant difference for all of you folks. Running quickly here. This is a new one, car loan interest, right? And there is a big element here. The car have to be finally assembled in the US. Your interest on any new car is capped at $10,000, right? We post a lot of this kind of tax news on our social media pages, our website. We have a little bit of that. So I would encourage you to, if you don't follow our social media pages, go there, follow our social media pages. We post a lot of new information. Okay, we're gonna look into the questions at the end. So there is no tax on tips there. There is a list of occupation that qualify for tips. It doesn't mean everybody who's getting tips is gonna be claiming this deduction, right? The maximum is 25,000. That is, no taxes on the 25,000 on tips. There are certain requirements here that you have to meet, and one of them, you have to be in one of the occupation that qualifies for that. And we have a link here that shows you all of the occupation that are part of that. Unfortunately, for me, right, as a CPA, I'm not in that list, right? So sad for us. Um, yeah, sadly, we didn't make the list. We didn't make it to the list. No tax on overtime pay, right? No tax if you're single or married filing separately. It's you know 12,500 there that you can deduct. We didn't have these deductions before the new tax rules came into effect. There's a senior deduction that came in. If you're single or head of household, you have $6,000 in additional deduction on top of your standard deduction or itemized deduction. If you're married filing jointly and both are 65 or older, there is a $12,000 deduction, okay? There is $12,000 deduction. Charitable contribution, there is something new here for us as well, right? Even if you don't itemize, which was the case in the past, you can deduct $1,000 as charitable deduction. If you're married filing jointly, it's $2,000 for deduction. Now, final thoughts here. You want to make sure you're keeping your books on a at least monthly basis, on a quarterly basis. You're paying your taxes, you're filing your payroll if you have payrolls or employees. You are planning for the quarter ahead. Annually, there is a deadline here, right? At the bottom of every single slide, literally I put there, right? Deadline for you all of your 1099 needs to be filed, W-2 filed and sent to your employees. Make sure to file your state annual reports or renewal if you want to continue operating in our state. Review your contracts, your large contracts. Review them, make sure they're current. If you are looking for certification with the city of Chicago, right? Make sure you talk to the city about that. Okay. I recommend all of our clients to have your compliance folder, right, with all of your tax returns, licenses, and key governance documents. Very important for you to have there. And last but not least, if you're gonna file taxes this year, right, here's a list of at least a number of things that you need to keep an eye on. If you are an individual, just a taxpayer who doesn't have any business, here's your list. If you have a side hustle, you are a single member LLC, a multi-member LLC, or any other type of entity, um, you also have your list there, okay? So at the end, this entire presentation will be distributed to all of you who were part of this conversation. And I want to really thank you. Thank you so much for spending your time with us today. And I'm gonna turn it back to Stephen for any Q&A. So thank you. I appreciate you bearing with me here.
Thank you, Luntadilla. You covered a lot of ground there. Um, we had over 200 people on the call at certain points, so there were a lot of questions. I'm not going to be able to get to all of them, but I did write down a few, so
Yeah.
we'll try to get to them. One question from earlier in your presentation,
Mhm.
can you be your own registered agent?
Oh yes, by all means. I'm no I stopped being my own registered agent probably 3 or 4 years ago, just to protect the confidentiality of my own address. So I use somebody else's address, right? There is a business that I use that is my registered agent. Yeah. But yes, you can. You can be your own registered agent.
Okay, thank you. Elizabeth asked, um, is there a tax benefit to an employee identification number? Is it required?
It's not required to have an EIN. You can operate as a solo entrepreneur and use your Social Security number. There is no problem whatsoever with that. It, you just decide what you want to do in terms of your structure, what makes sense to you, what facilitates your life, right? This is, again, one of these other things that I love about this country, right? You have freedom to do whatever you want with your business, however you want to do it, okay? Other countries, that's not the case. There is one way of doing things in other countries, okay? Here, we have many ways, and nobody's gonna tell you if you're wrong unless the law tells you you're wrong, okay? Yeah.
Thanks, Montadilla. Somebody else asked, um, do you have to pay out a distribution if you're making revenue but not enough to make a profit? Um, you have to pay yourself a distribution. What do you do in that circumstance?
Another amazing question. Here's something that I always remember, right? When you think about companies like Amazon, Twitter, and many others, for many years, they were running at loss. Okay? They weren't making money. But it doesn't mean that they never pay their employees. They didn't do a dividend distribution to the owners, but they had operating expenses. So depending on how you are organized, right, I would still recommend you, right, have that $100 distribution if you can. Have that $500 distribution if you can, right? If you're not making, let's say you're making zero money, then you shouldn't have any money really to pay for much unless you have a credit card that you are using to pay for expenses in the business, right? You have to have a process to have a reimbursement for yourself when the business begins making money to reimburse you your money. Another strategy we often use is you lending the business money. If the business is not making enough money to pay you, lend the business money so that it pays you a distribution or a salary so that later the business can pay you. But document that. Make sure you're documenting, okay?
Thank you. Lunta, I also want to thank somebody else who was on the call who was answering a lot of questions as we went along. I think this gentleman is himself a CPA. His name is Harry Eng. So, Harry, if thank you for your participation today. Um,
Thank you. Yeah.
One of the questions that was asked, you showed an Excel spreadsheet. I don't think it was part of your presentation per se, based on Adam the barber who made $78,000 and what he had to deduct for self-employment taxes and Social Security taxes, et cetera. Can you make that a part of, are you willing to make that a part of what we send out to the participants in today's webinar?
I can create a shorter version of that, right?
Okay.
And much simpler than the
Okay.
because the one I just showed is an internal tool. We run our numbers, right? What we actually send to the client is a PDF printed that shows exactly the summary, the computations.
Um, Thank you.
Mhm.
Again, I want to reiterate that we will send a copy of Luntadilla's presentation, including a simpler version of that spreadsheet regarding the barber earning $78,000. There will also be from BACP of a recording of this presentation. Um, Somebody else, one other question that I noticed, somebody else asked about writing off vehicle expenses up to 100% if you're using it completely in the business. Could you speak to that?
Yes, that's actually one of these areas where it's important to have proper documentation and organization, right? Number one, is the vehicle, who owns the title of the vehicle? Is it the business or you as an individual, right? It's very important to answer that first question. If it's the business writes off whatever amount you used for the business, right? If it's an individual, right? Now we have actually really amazing benefits there, right? If you use the business, the vehicle over 50%, right? You can actually get this entire bonus depreciation. Okay. If it's personal vehicle being used for business purposes, you have to prorate the portion that it's business and that is personal. And it's really important that you are keeping track of what's personal and what's business. Okay.
Um, Two other questions I see. Laureen asks, if you're a single member LLC,
Mhm.
should you be running payroll?
Okay, we probably need a little bit more context there, but so running payroll for whom? For yourself or for your employees? If you're a single member LLCs for yourself, you don't run a payroll because you are a member of the limited liability company. Okay. But for your employees, you can have a payroll, just not you. If you want to have yourself in payroll, you either need to be an S corp or a C corp. Those are your options. Okay?
Right. Laureen clarifies. She says there are no employees. She is the only person or member of the LLC.
Okay.
Um,
Yeah. In that case, right, either move to an S corp or a C corp. But as a
and
single member, just with yourself, nope.
and Harry Ang again clarifies, if you have one or more employees, you will have payroll and you will have an EIN. That's when you need an EIN, I guess, when you have
One of
employees
these
that you're paying.
exceptional rules. Yeah.
Someone asked, are there any penalties or fees for keeping an LLC active if you're not getting any business or income through the LLC?
Oof, not to what I know, but here's the caution there, right? The Treasury Department cracks up on shell companies, okay? If you set up an entity that nothing happens in that entity, right? Effectively it runs the risk of being a shell company, right? So watch out on that. If you are not going to do anything with it and just keep it open year in, year out, right? Be mindful that there is not somebody, but the system monitors it. Okay?
And at one point during the presentation,
Yeah.
at least one point, you used the term a disregarded entity.
Yeah.
Could you clarify what that refers to?
Yeah, that's just one of these jargons we accountants and in industry it's used to say you're an entity, but you don't file certain form for a business return, right? For tax law, you can use your form 1040. That's effectively what we use in industry, right? Disregarded entity. Like the tax code is not looking for you, at least for tax filing, as, hey, you need to present a separate form to be compliant. Does that make sense?
I think so. It's about 4:25 now. We've got
Yeah.
about 5 minutes left, but as I say, we've still got many people on the line. I don't see any more questions coming in. One person asked, here's a question. Um, this person asked, I do everything, so doesn't that mean I am an employee? You want to take
I
that one,
mean,
Tadilla?
yeah, I mean, interesting. Well, you can consider yourself however you want, employee, owner of employee, but for tax compliance, right? For tax, from tax perspective, right? You fall under certain buckets, and if you're not inside that bucket or that operating structure, then you're not gonna be expected to follow certain rules, okay? Certain provision effectively is that. Right. So technically, I'm an employee in my business, but if I was is straight, our business is professional limited liability company because of the tax rules, right? As a CPA, if you have a practice, right, as a doctor, a lawyer, CPA, and some other professions, right, you jump out of the LLC to PLLC, right? So I can't do anything to change that. It's what the law says. And the law says if you are a single member LLC, you can be doing everything in your business. You're still not an employee. If you set up a payroll, we don't care about it, right? By setting the payroll, you're actually not following the rules. Yeah.
We have one more question. Somebody asks about expenses, for example, client meals under
Yeah.
$150. Is a credit card statement sufficient documentation, or do you have to actually keep paper receipts of every small expense?
Ooh, it's the little expenses that makes up the bigger expenses, right? So actually, just a quick tip here for meals, right? If you want to be bulletproof, right? Here's what you do. In your receipt, when the restaurant comes and gives you your receipt, you paid, you actually need to write there, right? Add a little bit more detail. The business purpose of the meal, whether you're meeting a client or a partner, an employee, and it was about this contract we're negotiating. Take a picture of that and upload it to your storage file. That's the best way of doing it, but very few people have patience of doing that, right?
This is a wonderful note to end with.
Yeah,
I don't know if you saw it, Luntadilla, but I want to read it out to you. I am super impressed by this presenter, the way he spoke conversationally while going over the slides with enthusiasm, made what typically could be considered a boring topic very interesting and easy to follow along. Great job and presentation, Luntadilla.
thank
I
you.
couldn't
I
have said
really
it any
appreciate
better
that.
myself. Thank you,
Yeah,
Gina, who's the author of that comment. We're not going to have time today to get to everything, but I want to thank everyone for participating, actively participating, hanging in there to the end. Um, and I want to encourage you to sign up for a SCORE mentor if you have
yeah,
questions, not only about accounting, but any aspect of your business, how to grow your business, how to start your business, how to market your business, how to financially project how your business is going to do before you quit your day job. Those are the kinds of questions we address literally every day of the week. It is free, it's confidential. Go to score.org/Chicago, and we'd be happy to help you on a one-on-one personal basis. Um, with that, it's 4:29. I want to thank our friends at the City of Chicago, the Department of Business Affairs and Consumer Protection. Thank you to Lontadilla. Once again, you
thank
did
you.
a marvelous job, and look for more offerings from BACP and from SCORE. Thanks very
Yeah,
much. Have a good day. Bye
thank
bye.
you. Thank you, everybody. I appreciate. Thanks.
Thank you to today's presenter. If you are a part of the BACP Entrepreneur Certificate Program, your account will automatically update within 24 hours. Thank you again to our presenter and SCORE for today's presentation. And everyone, have a great day and stay warm.
All right.
Thank you.